From the morning reading, investors have given up on emerging markets again as sentiment over the past 2 months has soured to the third worst level in a decade. Every time it has reached the current level of extreme, those stocks have rallied in the intermediate to long term before running into problems caused by the lack of buying interest. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:55 a.m. Central Time, and I'm recording this in preparation for market day, August the 19th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive on in and see just what happened in our overnights. Well, in the U.S. broad market indices are all weak across all four and somewhat variable. You have the S&P and the NASDAQ both down about 0.25% at the time of this cut, with the Dow down about 0.33% and the Russell the weakest at down about 0.5%. You have crude oil down about 0.6, and be aware crude oil has rolled over. The volume did move to the V as in Victor contract, so all trading should be on that contract at this point. Let's see, the euro up about just under 0.25%. Bonds essentially scratch, and gold up about 0.33%. A little bit of a bounce on China after last night's big time, or the prior night's big time drop. It's up 1.2%. Hong Kong down 1.3%. Japan down 1.6%. Germany down 1.1%. United Kingdom down about 1%. In terms of macroeconomic reports, obviously the big one, you have FOMC minutes today, and there's never any telling what could come out of that. While there's all kinds of predictions always cut into those minutes, and certainly the market will respond much like an earnings report. There'll be the headline number, there'll be the digestion, and then of course there'll be, where the market thought they were going to be versus where they are, and then whether they're happy with that or not. So you have to treat this afternoon as much like a global earnings event, as it were. You also have CPI today and crude oil inventory. So if you're trading crude oil, today's particularly a tricky day to be trading crude oil, in that you are in rollover, though most of the contracts are on the new, and you have inventory. So definitely could have some rolling around in that market, and sometimes poor follow-through on a rollover day. In terms of tomorrow, you have unemployment claims, the regular weekly variety, the Philly Fed manufacturing index. A lot of people paying a huge amount of attention to home sales at this point, and you have existing home sales come out tomorrow. And then on Friday, a peek ahead, nothing on the U.S. market except for flash manufacturing PMI, and that will occur during the market. In terms of our current market conditions, we had a little bit of weakness yesterday, and you see the short-term VIX 12.14. Skew ticked up a little bit, but not yet into a threshold area. IV percentiles all still very, very low. 21 for the S&P and up to 35 on the Dow. In terms of standard deviation moves, you had one put in yesterday on the Russell, and actually it's had back-to-back days with standard deviation moves, and 5 of the last 10 trading sessions have had standard deviation moves put in on that market. S&P actually has been relatively quiet when you look at close to close. We have not had a standard deviation move in a week of trading days. In terms of the regular daily report, still looking at trend breaking, and let's take a quick look at this chart. It's a pretty interesting chart today. You notice that obviously big time range we've been talking about for weeks now, but then we had this all important coiling or wedge or triangle pattern, I should say, triangle pattern here. And we had the breakout 2 sessions ago, and we were very interested to see whether that would hold or it would be just another false breakout. And of course, we're coming into this apex, so if this pattern's actually got any weight to it, it should be, you know, breaking out of that pattern at any time. Well, we had the breakout, and then yesterday we had some weakness, but notice where the weakness went to. You went literally right to the prior line, the prior resistance, now turns support, and then a close above that area. So this would seem to be holding at this point. Now, obviously, everything could be trumped. Patterns do not, you know, care when a Fed comes out with a significant announcement that changes the dichotomy of what people think they know about the market. So, Fed may not do that today. We may just kind of go hunky-dory, everybody, do your usual thing. But if they come out with brand new information, that could change the pricing structure, and that could you know, fly back down into this area or confirm this and take off. Now, I was with a group of traders on a conference yesterday, and we were talking about, well, if this does confirm and move up, where's it likely to go? And I think to an individual, every single person on the call thought that we were likely to not get past this this upper resistance area. So the safe trade is to target this area, probably front run it by a little bit, and then probably wait to see what the rest of the market does before exposing yourself to significant long deltas with an expectation that we're going to make new all-time highs by any significant amount. Given this historic sideways action that we've had in recent months with really, you know, a record number of crosses of the 50-day moving average for the year, and we're not even, you know, 20 weeks to go kind of thing. Until you get proven otherwise, expect that this range will be held. So if we get positive follow through on the Fed today, you know, kind of look for this zone right here to be the zone in play, that we stay above the apex of this triangle, and that we probably stall out, you know, somewhere around the resistance area of the channel. In terms of the Russell, everything's not quite as clear when we come to the others. This could be looked at as a wedge pattern, which normally would be expected to break bullish. But obviously, if you go back to the S&P, and if you look at this as a rounding top, and that this is eventually going to have lower highs, and we're going to eventually break down in a significant way, the Russell may be simply leading the way, as it often does. And then the NASDAQ, very much the same thing. We had the new high put in, but then have been very much in a bearish shorter term trend ever since, and that continues. Now, if we get new significant swing highs on the NASDAQ and the Russell, that will be most telling, and that's certainly one of the tells that we'll be looking for. The Dow also, much like the Russell, really quite weak, and has been quite weak for a number of weeks. So that is also in our mind. In terms of our investor posture, IBD status remains going into the 4th week is uptrend under pressure. Accumulation distribution scores a D plus and a D plus on both the S&P and the NASDAQ, so really poor breadth being scored into this market. GMI index actually improved a little bit yesterday to a 5 out of 6, but I believe that author is still in cash. And you see decision points, lots of red arrows here, not a very healthy sign there. The intermediate term market posture did turn first day bullish again. It's been flip-flapping back and forth. Really, why I share with you the technical standings on these indicators, you should read this as strongly neutral until we have something that clearly confirms a new trend one way or another. Indeed, You had bullish across all four indices, with the S&P being the lone one, and this is always a sign of warning to my wife and I when we're trading futures. If the S&P is the leader, that is not a good sign. You look for the Russell and the Nasdaq to be leaders, and here we have the Russell, actually the weakest, and the S&P the strongest in terms of its score and degree of bullishness, as it were. Big time, strongly neutral in reality. In terms of warning status, still at level 1. The yellow light, or breaks as we like to refer to it. From the various metrics, though, actually, we've had some healing here in the last couple days, and if you were to put any kind of bias to our strongly neutral stance, it would be slightly bullish, and that certainly is reinforced by the last 2-day pattern on the SPX. But volatility based, these have ebbed back off to just normal levels. You do have a VIX daily squeeze, and you do have this very high distribution day count on the S&P at currently 8. Very poor action yesterday in the New York Stock Exchange in terms of not having over 300 new highs. So that certainly did not help anything. And in terms of the risk aversion indicators, I still have 4 of the 5 of these as technically risk off. They're frankly, the lines are right on top of each other. I could have pretty much called these either way. And probably if you have to take a magnifying glass to it, you call it neutral is probably the best way to put all 5 of these in reality. If you go into the particular opinions, option income strategies, no real changes here since yesterday. VIX is inside the acceptable windows. Conditions are acceptable for new positions, but consider the potential for increasing volatility. Remember that VIX is in the daily squeeze. It can be there for a prolonged amount of time, especially during summer doldrums, and this is an excellent way to make income in a sideways market. Is probably the best way right now, and as they say, until it's not. So just be careful with your position sizing and so forth, and that you don't give everything back with one trade that you've made in a whole bunch of trades. Covered call strategies, conditions are probably pretty borderline to initiate new positions, especially for novice traders. Aggressive traders should consider only using in the money strikes and or reduction in position size. Even better, consider legging into covered calls through put selling, and then once assigned, do your covered call strategy. Put selling is also borderline acceptable. Again, reduce position size. Look for that pattern to follow through. We've had a breakout pattern, but until we get past the Fed at least and see some movement away from that former coiling pattern, you probably are kind of borderline, so consider scaling in if you do anything today. In terms of sector specific, generally, fairly decent, but remember, these are also frankly strongly neutral. So to say up and down, many of these are very much wrapped around themselves and are also exhibiting strongly neutral kinds of stances. We had a generally negative day yesterday, but most of these numbers aren't terrible. If you're going to have a down day, you want it to be a down day by 0.14 as opposed to 1% or something like that. And certainly we had that yesterday. So if we're going to have a breakout and then a bit of a pullback, this is the kind of weak pullback that you would see in a bullish market. So far so good on the breakout, and we'll look to see what today brings, and do we confirm this pattern and start to move up into this area and maybe get some follow through on the shorter term time frames. I believe that's probably enough for today. As always, you're retweeting us to your Twitter followers, to your StockTwit followers, to Scootify, liking us on YouTube, subscribing to the YouTube channel. All those are things that encourage us to continue to invest our time and effort into producing this video each day. We frankly take great note as to all those metrics each day. If you have feedback, support at falconglobaltraders.com is the email address. More information about how we apply these principles into daily trading can be seen at this website. And then, of course, disclaimers as always. Hit the pause button if you need more time to review this. And we look forward to seeing you back here tomorrow morning before the market opens with the market preview. Good trading.